2022, what we're seeing generated on the Chicago Board of Trade, the returns, the numbers, the dollar values being exercised on that market, they're being driven, yes, of course, by supply and demand. A very tight global supply, a war in Eastern Europe, all of those things are going to help support values. But also, it's that outside money. It's the managed money, the investor class that is seeking a return. Folks, these are investors, these are large-scale hedge funds, and they got addicted to the profit margins they saw through the 2000s, the 2010s, and then even throughout COVID, most of these activist investors were moving their money around. We saw incredible gains in equities. They want to keep those returns. And if we're seeing the stock market values start to lower, if we're seeing equity prices come down, the amount of volatility available in that market shrinks, which means the profit potential, that risk reward, shrinks as well. Global commodities. If I'm an investor looking at global commodities, I see a pretty compelling story in 2022. I see an inflation hedge, potentially buying physical goods that we're going to move for cash later on. I see food at the end of the day when we are heading towards what some are calling a global food crisis. I want to be long food when the world is running short of it. And finally, war. This upheaval that we're seeing in Eastern Europe, the potential tensions that are rising between China and Taiwan, all of these factors are going to work to keep that outside money far more interested in the commodity markets than it typically is. We have seen this over 2022. The Commitment of Traders report, which is a report, if you don't track it, I recommend that you do. Google Commitment of Traders. It is a measurement of the buyers and the sellers in each commodity market. It's put out by the CFTC, the overarching regulatory body for the commodity markets. It's published on Friday, and it shows positions in the markets as of the Tuesday prior. And importantly, what it shows, it shows who is making up the market. It measures commercials, which are your elevators, your farmers, potentially people who could physically touch that grain at some point in their ownership. And then there's small-time speculators. That's if you or I jump on the Chicago Board of Trade, we call our broker, we get long 1 December corn contracts, we think it's going to the moon, we're a small speculator. So we got commercials, we've got small speculators. The third category we track in the Commitment of Traders report is non-commercial traders. That's the category I want us to be watching as we figure out market moves here into this next year. Non-commercial traders are people who are speculating, they are involved in the markets, and they might never physically touch that grain at all. They have zero interest in the corn contract for its underlying value as corn. They want the futures contract so they can bet for it to rise or sell and then flip it. As we see more and more managed money, that non-commercial money, enter the markets, it enters it with different expectations than commercial growers and farmers. You or I go out there, we go buy December corn right now, right? Yields are looking like they might come a little bit down this year. Let's just jump ahead to December corn and walk through this. We're seeing yields come down. Pro Farmer Crop Tour was out 168 and change. We had DTN come out with their digital yield at 167 and change. StoneX just released their yield yesterday. Farmer survey base, no actual boots on the ground there with StoneX, but they've got us at 173. Overall, we're seeing the market come to grips with the idea that the corn crop we thought we had on August 1st out there in this countryside, and it's a corn crop that unfortunately wasn't predicted to be here in Nebraska from the get-go. A lot of us know the struggles that Nebraska, South Dakota growers have seen this year. The corn crop was expected to be in Indiana and in Ohio and in Wisconsin and in eastern Iowa. That's what all of the traders I've spoken with all summer were guessing the corn crop was going to come from. Yeah, North Dakota got in late. Yeah, South Dakota got dry. Yeah, Nebraska got dry. Yeah, parts of Missouri got dry. But we're going to have such a monster crop here across the eastern corn belt that's going to more than make up for it. This is the value of these crop tours. We get boots on the ground, whether or not you agree with the nationwide trespass tour, the data they provide is very, very valuable because it's the first time a lot of market participants effectively got a view inside these fields. Think about it, your borrowers and you, most likely, you're seeing these cornfields all day long. That non-commercial money, that investor money, they're not watching it at all until a headline grabs their attention. Because that's how I don't want to say all, there are lots of different styles of investing and money management in the commodities trade, but a lot of that managed money, that non-commercial money, is managed by algorithms. It's very quickly traded. These algorithms scan headlines for keywords, and then they buy or sell based on those keywords. And then a second algorithm tends to kick in, and it tracks trends. Are the markets rising or are they falling? And then they buy or sell to follow the trend. And it's that trend-following buying that can make life really, really fun for agricultural producers, because that trend-following buying, that fear that perhaps my algorithm is missing out, and so we've got to double up and just keep watching this thing grow, that is what drove that price to those record heights or near record heights. It was the idea that, well, it's still going. The challenge, though, is once we get to the top, once we run out of that managed money, once those computers pick up a different headline and their focus changes, and they go, all right, we've made our money, time to sell, that same fun ride we had going up, we see it on the way back down. The managed money movements through these markets are going to determine whether or not your growers are in the top 20% of profitability or the middle 50%, because that's the goose that's going to get us up to those elevated levels. That's the nitrous gas that we're putting into the pistons. I don't know where nitrous goes. I'm not much of a car guy, apparently.